If you've been watching the higher end real estate market in Belleville, Quinte West in the county, you've probably noticed that luxury properties are taking longer to sell than they were a year ago. The numbers tell the true story here. When we look at properties listed above 999,000, at the time of making this video, there was just 34 sales year to date. The same time last year, there was 56 sales. That's a decline of roughly 39%. At the same time, there's 140 active listings on the market in this price range. At the current sales pace, that amounts to 24 months of inventory. And for context, a normal balanced market is between 4 and 6 months of inventory. That's an enormous amount of supply relative to buyer demand. So what's causing this? A big factor obviously is economic uncertainty. Even though interest rates and prices have come down from their peak, many high ticket buyers are still cautious in taking the wait and see approach. We're seeing less migration of buyers from larger urban centers like the GTA and Ottawa, where home prices are generally higher, which means less money coming into our market. There are far less move-up buyers in the market, either because they can't sell their home or they can't get what they want for their home, coupled with the economic uncertainty and less appetite to take on more debt and a higher mortgage payment. In general, people are being more careful with their money and taking a longer time to make these big financial decisions. The result is less buyers in the market competing for more listings. For buyers shopping in this price point, it creates a great opportunity. You have way more selection than before, way more negotiating power, and way less competition. For sellers, the reality is unfortunately a little bit different. With less buyers and more competition in the marketplace, buyers have the leverage to take more time, compare more options, and negotiate harder when they do make an offer. This generally translates to longer days on market, less showings, less offers, and significantly less urgency from buyers than we've seen in years past. That said, real estate markets, especially as of late, are heavily influenced by psychology and sentiment. And conditions can change relatively quickly if we start to see consumer confidence improve or economic uncertainty fade. As we move past the halfway mark in 2026, the luxury market has a lot of ground to make up if we're going to see the same activity levels we saw in 2025. Thanks for watching this week's real estate update, and see you in the next one.